Teddy Lou will be right back.
Oh, hi, this is analysis. Let me just turn off in the background 1 second. Okay, right. Okay then, so yes, so where are we? Okay then, so basically, like I explained in the last video, I obviously went short on the FTSE at 6750, and this 60-minute chart here obviously clearly presents the setup that I posted. As you can see, it worked like clockwork. Previous obviously support equals resistance, exactly at the trend line. Obviously with a bearish engulfing candle, and we're looking to consolidate within this red candle at the moment. So we'll see exactly how it plays out. I'll discuss exactly where the market's going shortly. So yes, the short FTSE obviously played out. We went as low as 6720. I managed to get plus 20 odd points on the first 2/3 and plus 30 in the last 1/3 short, so that was good. I had a short on yeah, so that was a good trade. Obviously 370 points I think I am for the week, so far so good. At the moment I do have a bullish bias, especially on the DAX and the Aussie, which obviously my subscribers know with regards to my current active trades. So where is the FTSE 100 going? Okay, so yes, we do have 6-700 obviously in view, due to the HNS formation, which I've already explained. So this here could be a bearish, or should we say bearish inside bar, consolidating within, and obviously move lower. That's a possibility. So as traders, we need to accept every possibility. But from my perspective, I will be buying the dip. Okay, so if there's any retracement here on the FTSE, I will be buying it and expecting a higher price, mainly due to the fact that the stronger Chinese data overnight obviously supports the commodities market. The fact that our gold and oil and copper are now coming into support as well. They have sold off quite considerably, mainly due to the tapering concerns going into December. That was off the table, now it's on the table. So again, that obviously helps the dollar. Also the fact that we've had some discussions with regards to Janet Yellen and a few senators there opposing her nomination. From my perspective, she's an absolute crackhead, along with Bernanke. Absolute nutters, destroying the world economy, let alone the US economy. Is it a surprise that the German government now is trying to court Mr. Snowden? No, it's not. Especially after the fact that the Yanks have been listening to Merkel's phone calls. Ridiculous, really, from my perspective. But that's just the way the Americans want to go. Obviously, they've lost the moral high ground. It's a degrading society. They don't have any morals left, no principles. They don't respect people's rights and personal, shall we say, just personal rights. At the end of the day, why should you be interfering in other people's phone calls, especially a head of state like Merkel? Anyway, so with regards to this, let's see what's happening. So the fact that we have a Nasdaq, I have already sent to my subscribers, is a HNS formation of the Nasdaq, which again will keep the shares at bay. And that's one of the reasons why I think the DAX isn't propelling higher, although my bias still remains long on the DAX. And the fact that the euro obviously is getting hit quite hard. So we'll see. It's interesting time. So going back to the FTSE here, you can certainly argue that the larger there's a HNS in the larger time frames, therefore ultimate lower here, which is gap fill, which I've already discussed. If the market does have a flash crash, then we are going towards this region here. Given the fact that it's a Friday and the Yanks love to manipulate the stock markets on a Friday to keep their overgrown obese citizens happy going into the weekend, so they can keep spending. Especially given the fact that it's Halloween, then more than likely the markets will probably trade sideways to obviously going higher, given the fact that there's manipulation and the Yanks, obviously their market is very corrupt at present. Okay, so let's have a look at this chart again. So like I explained yesterday or last night in my videos, that there would be a potential IHS formation in the long run. So we have this neckline here. Let me just extend that for you. Okay, so first of all, we're obviously building a base. That's the reason why I say I'm looking to buy any dip. Okay, I've already got 2 trades active, which are risk-on scenario type trades. So even if I don't get a fill here, I'll still benefit from the rally higher. Okay, so let's have a look here. Drawing my gap level there where the market opened. Okay, so obviously we've got your left shoulder here. We are creating a potential head. We need to go back up to the neckline around the 6760 level. Okay, hence the reason why my bias is bullish here up to 6760, and then we should potentially create a right shoulder and close this gap here. Now, given the fact that we have some economic data coming out in the next 10 minutes, that may well propel the FTSE higher. Again, you know, there's a possibility there or a probability there. Okay, but from my perspective, we are creating a base which we already have now. We need to, given the fact that the economic data was good in the UK as well. Remember that, folks. Chinese data good, obviously. Remember that as well, folks. Okay, so and adding the fact that Mr. Nowotny is going to ease QE, baby. You know, in Europe as well now. Basically, the Germans have said to the Americans, middle finger. Basically, if you want to listen to our phone calls and you want to complain about our economy, here's a middle finger. We will do QE now. You've done QE. You've destroyed the global economy. You've destroyed your dollar. You've taken all the exports away from us. It's a currency war, and game on. Okay, so basically, Europeans have had enough. Okay, now it's their time to do QE. It's their time to inflate asset prices at the expense of the world. Remember, it's global trade is a zero-sum game. Somebody benefits, somebody loses. Europeans have been losing for some time now, obviously subdued by the Yanks. Now, literally, middle finger, we'll do the same. We'll do QE, okay? We'll neutralize your QE, okay? So now they really need to focus on the fiscal cliff in America, given the fact they've kicked the can down the road. Definitely not looking good for the US stock market going forward. This is hence the reason why a lot of money has been repatriating towards the euro. And surprise, surprise, the euro now is obviously euro debauchery as opposed to dollar debauchery. That will help European exports, and the export sector will go higher. So if I was a long-term trader, which I am starting to set up my fundamental analysis service, hopefully in January, if I was a trader right now, I would be long European equities, short US equities. I'd play the hedge. Okay, why? Because it's European QE versus US QE gone wrong. Okay, especially with this nutter now with regards to Miss Yellen. From my perspective, she looks like an evil dwarf that really will destroy the American economy, especially if she goes down the path of more QE, more QE. Obviously, Mr. Ron Paul is after her. He wants the Fed to be accountable, and God knows how much of a black hole they have as well. Okay, so don't get me wrong, folks. This is basically not me being negative. I'm just giving you a reality check. Okay, the fact that the European equities have been rallying, a lot of people have been, and this is one of the things I was contemplating as well. The fact that the ECB or the European policymakers have been very anti-QE, have been very anti-Euro bonds, have been downplaying a negative interest rate. But it's come to a point now where German data, or should we say Germany, because remember, nobody cares about Europe until Germany gets affected. Once the Germans start feeling the pinch, that's when something needs to be done. Why? Because it's a powerhouse in Europe. Hence the reason why the UK don't want to join Europe, because they realise that Germans control it. Okay, they won't have any control, they won't have that clout, etc. And literally whatever they will only do what's good for Germany. Now, given the fact that the economic data with the Bundesbank has been, the German growth forecasts have been halved, the IFO expectations data has been pretty negative as of late. Now we've got concerns about deflation in Germany now. Something needs to be done. Okay, hence the reason why there's a U-turn now. Mr. Nowotny comes out with comments which perfectly timed, given the fact that the Americans have been listening to the phone calls and the Germans have been embracing Mr. Snowden, so on and so forth. So there's a war being waged there, and there was an article in the Daily Telegraph and the BBC with the Yanks complaining about German exports and the fact that it was keeping everything at bay. So watch out for that. Okay, so I'm looking for DAX, say 10,000, FTSE 7,000, easy. Okay, towards the end of the year, given the fact that this European Kool-Aid is on its way. Okay, and everybody will be awash with extra cash. So it's Wonga.com in Europe. Literally applications free. Everybody apply, and excess liquidity galore. Stock markets are going to the moon. Okay, but who will suffer? The US equities. Why? Because the game in town, or the game to be played in town, or the game to be watched in town now, is European equities. Nobody cares about the US equities anymore, given the concerns obviously we've had with Apple, given the fact that it thinks it's shall we say its consumers are stupid. Each time it reduces the weight by 0.1 grams and increases the memory by 0.2%, or puts in a new chip, and all of a sudden it has people queuing outside buying the same product that they already have at home. There's no sense there either. So given the fact that Samsung and other competitors taking over now, especially with regards to the tablet market. Android is certainly taking over, and it certainly excels Apple's iOS as well. So that's coming to an end, okay? Because Apple is the Nasdaq, and the Nasdaq has obviously been being inflated by Apple. And as we all know, POMO, QE pumps money into Apple shares. Apple shares get inflated, Nasdaq gets inflated, and the Federal Reserve control the stock market, and they can inflate all markets higher. And surprise, surprise, it's always done overnight when in the futures market, when it's easy to manipulate. Okay, so their game is coming to an end. They can't manipulate the stock markets anymore. It's got to a point where, let's be honest with you, the Europeans have had enough. Hence the reason why they're doing their QE as well, and that will neutralize any of their QE. So it neutralizes it. Why? Because of the currency factor involved. Okay, so the Euro USD obviously was approaching 1.4. They were very concerned, periphery, etc., etc. Now they will take all global trade and take it away from the Yanks. Okay, so that's going to be interesting going forward, especially with Nokia as well, given the fact that we're talking about phones again, given the fact that Nokia is now re-emerging as a global player in terms of the phone market, obviously tablet market as well. So their day, Nasdaq's days are numbered. Okay, so an S&P, Dow, etc. All these, literally, for my call is going towards the year end. The Yanks, the US index will be weak. European indexes will be much stronger. Okay, and they'll far exceed it. And that's why the Chinese are not stupid. The Chinese are now pumping money into Europe now. Okay, and that's why the euro recently was gaining a lot of strength. Why? Because and there's some stat out recently as well with regards to the amount of money flow that's going into Europe, because they expect that to be much higher as well, and they were anticipating QE. As we all know, the game's rigged. Okay, so a lot of individuals have inside information, and that's why you've been seeing European equities making new highs when a lot of people have been scratching their heads given the fact that euro is doomed to failure. Anyway folks, that's long enough for now. Okay, midday video, 10 minutes. Keep an eye on this pattern here. We should come back to 6750, 6760, come back, create a right shoulder, obviously thrust higher, or we build a base here, we thrust higher, close the gap at 6775, and obviously go to the moon based on that. Okay, let's quickly just bring up a chart of the daily FTSE 100. So I'll give you a little perspective on there where I expect this market to go. The FTSE 250 obviously has been meandering there, okay, at that trend line, but that will eventually break, given the fact that the FTSE itself is going to be going higher, much higher. Okay, so obviously we had a topping tail reversal, bearish engulfing candle, classical reversal pattern. Previous resistance equals support, so hence the reason why if 6700 is does come back, touch it again, 6700 is solid support. Okay, and on the weekly chart, just quickly give you an insight on that, and I'll wrap up this video here. Obviously weekly charts so far topping tail, but that won't last, given the fact that you have QE. Having said that though, the FTSE can suffer if the Europeans obviously do their QE, because obviously the currency, etc., and they will suffer in terms of trade, as so on and so forth. But given the fact that the European indexes move in tandem and they have a strong correlation, and given the fact that the Chinese data has been pretty good as of late, we should eventually break this key psychological resistance, which is 6750, 6800 on the weekly candle, and expect an epic short squeeze, given the fact that the Europeans are now doing QE, and that will cause the FTSE to go to 7,000, much higher. Okay folks, that's just an insight in terms of fundamentals, technicals, intermarket analysis, just give you a summary of how I think, my thought process for the day. Okay, so it's been a fantastic week, good weekend to all. I mean, almost 400 points this week and counting. Life's good. Okay, always remember, risk on, risk off, wax on, wax off. Goodbye now.